Hello traders, welcome to our daily analysis for March 20 and 21st. We're right now at 21st, almost 5 minutes into 5 a.m. London sessions, about 2 hours into London session. So let's just get into it. I got quite busy recently, but also I'm sort of wrapping up because I'm taking off for in April. I'm gonna be away for a month, so really at the end of March right now I'm not really doing anything too crazy because I'm gonna be away during the trip. I'm not going to be able to manage, so pretty much I'm going to be just taking off from the market. Now April of course is the election month for France, so it does have some quite nice trading opportunity. But it is the way it is. You have to have time off from the market, especially otherwise you get crazy. At least for me, if you trading 24/7, things like this. So I'm kind of lay back a little bit right now, but let's just still get into a general analysis. So last week, my last analysis was for Bank of England. I was saying that they actually I wasn't sure what was my last analysis actually, but the Bank of England last week actually came out, surprised the market, become quite hawkish, especially one of the member dissent. So this was last week. So the main events last week, of course, it was the FOMC meeting, and that was a big thing. The market got what they expected. And again, buying the rumor, saying the fact, dollar dropped, which I don't think there's really a significant reason, but that's just how the intraday market works. Now, if you are a swing trade trader, a lot of people will jump in actually to try to dip buy. That's why it's completely, basically different style of trading depending on your time frame. But that was what happened last week. And then we have Bank of England, Bank of Japan. Bank of Japan was not a big event, but Bank of England was a surprise, as you can see, especially the vote 009 was expectation, and one member dissent become very hawkish, basically saying that BOE should tighten interest rate, to prevent a sharp rise of inflation. And as we talked many times before, that inflation came from a depreciation of currency, which is British pound. So because of that, we saw a huge buying power into British pound, and later after the event didn't really have anything after. So G20 meeting doesn't really have anything after, and March 17, Trump had a meeting with Angela Merkel. Didn't really shock the market. Basically, the market is still in a dovish Fed mode. So entering into Sunday, we didn't have anything. It was a bank holiday in Asian session. So yesterday was very quiet, all the way until a monetary policy meeting, which I read through it, wasn't really a surprise actually. If I have to say, I find it again, it's quite hawkish. I shouldn't say hawkish, but it's quite neutral. So it's neutral in a positive outlook. And then later on, we will have the CPI from British pound. Now this will be interesting because if we have another higher CPI, I do think we will have a better British pound buying into it, because that really fulfill what the Bank of England was worried about. So on the other hand, if we have a miss, then we should see British pound drop. And another notable news is that the Prime Minister May announced that the triggering of Article 50 is going to be on March 29th next week. So that of course caused some bearish movement into British pound. Although it's not something new, but as I mentioned, at the moment they are really going to make it happen. That's what people are gonna feel like, oh man, it's happening. That's where the panic starts to kick in, and the market should be shaken up, especially for British pound. Now, we do have the EU president saying that Britain should make example that leaving the euro is never a good idea, and it's not really a retaliation. But if you gotta look at it politically speaking, French has this election coming up, Germany has this election coming up, and Eurozone is pretty much held by German and France and this kind of strong European countries. I do think it's a tendency for them to make some sort of example out of UK. So that's why I do think the negotiation might be a little bit tough for UK. But again, I don't want to guess. Nobody knows. All we know is that it's going to create some sort of uncertainty, and that uncertainty will be negative for British pound. However, before that happens, understand that because of the inflation, we do see a lot of anticipation for Bank of England to raise the interest rate. That will be a positive bullish momentum for British pound. So watch out for this CPI data. And this week later, of course, Bank of England Government Carney will speak. This could be important. Core retail from Canada, not really a big deal, to be honest, because Canadian right now is just really follow through with the oil market, and in terms of what's going to happen between the NAFTA deal with Canada and US. GDP price also not a big deal. It has been negative. If we have some sort of result, you can have some small intraday movement, but New Zealand in general is still quite bearish because of the central bank. Then Wednesday, crude oil inventory, this is as usual, and we'll see if we continue to have a build or a draw. Official cash rate, now this statement is very important. It's another one from RBNZ. The expectation is that last time, regardless of the positive data, they had been quite negative. So after that meeting, the New Zealand data hasn't been that well. So the expectation is that they should still be quite dovish. Consider they were dovish even with the good data, and now they have a bad data. They should be even more dovish. Of course, again, nobody knows what the central bank is going to do. The best way to trade it, you can always trade into it, but the best way to trade it is really trade afterward. And then Thursday, have another retail unemployment claim. This is really not important, but Yellen is going to speak on Thursday, which will be important. Then you have a consecutive PMI from European countries. Finally, you have CPI from Canada. Really, I think the most important thing is the Fed member this week, because right after FOMC last week, you have another consecutive Fed member coming out. And right now, the market is kind of fragile, basically. So what's going to happen to US dollar? Again, it really depends on how you trade it. If you are an intraday trader, a day trader, I think right now the momentum is still quite bearish to the downside. But if you are a swing trader, right now you might actually have a pretty good level to buy US dollar. So we'll get into a chart fairly quickly. Okay, so last week I actually took a few trades. Just give me 1 second. My British pound trade unfortunately got stopped out, and I think I went over that already. It was right after Bank of England, and right after that, I think I took 2 more trades if I remember correctly. Let me check my journal right now. I took a pound Aussie trade, and it was actually was on 17. So I took a pound Aussie trade right here, this red candle. I took it upon the news that they want EU wants Britain, UK to pay for the Brexit bill first. So they want the UK to pay the money that has to be triggered in the Brexit bill. They want them to pay that money first before they can start any negotiation. So that's really kind of a hostile start of the negotiation, kind of negative for British pound. I shorted it, didn't really have anything happening, and I have a very tight stop loss, so I actually got stopped out right here. But that was prior to the weekend, and that's pretty much what happened. Friday closing. No, only until Monday we have this drop movement. Now this movement came from the news that Prime Minister May is going to trigger Article 50 at May 29th. Now I wasn't in front of my desk, unfortunately didn't take this opportunity to trade. So that was the one trade I took. The other one is dollar yen. I tried to basically grab the bottom again on the 17. And the again, I heard the squad on G20 that the basically news from Japan saying that they are really committed to their QQE program, and I at the same time, dollar is really tasting 113 level. I think it's pretty nice level, but again, intraday trade wasn't, and then we still have a dovish bearish sentiment, so I wasn't too confident. So small position just to try out, very tight stop loss, and I did get stop loss actually. Did get stop out today actually, because it's just been a range bump. So intraday, that's what happened so far for me. In terms of daily trade, let's take a look at our 28 pairs, and I can tell you which trade I'm currently in. So first thing first is that our dollar trade, unfortunately got stop out at break even. And it's a bummer, to be honest with you. Now, if you've been following me, you know that my biggest weak point is the management. And analysis, I think, is okay. Entry point, I think, is okay. And, just general analysis, I find my analysis was okay. I wouldn't say good, but it's okay. But my management really sucks, and it just maybe sucks for me. If that's the case, that's really the best case, because I definitely don't want people to just follow me blindly. So you can certainly take some advice, some tips, but manage in your own way, because I suck at it basically. So what happens? Of course, I got in at 11280, really just really at like a bottom, double bottom, all the way up to here. I didn't take any profit, didn't tighten any stop loss, and basically at break even. Now, of course, I didn't lose money, but it's for me, psychologically, it's really not a good feeling to see all the profit went away, especially it's not just one-on-one, it's more than one-on-one. So I'm still adjusting, again, fundamental and technical is something new for me as well. So I'm still learning, still to find the best way to manage it. But definitely I need to have some tightening. Previously, I think beginning of this year, I have a problem of tightening too fast. And really, that's the hard part about trading, is when do you move your stop loss? Is it one-on-one, is it two-on-one? Is it very mechanical trading, or do you do with fundamental? And you always have a risk of getting whipsawed, stop out very quickly, only to see the trade goes in your direction. That's a bummer, not a good feeling. Or you have this kind of feeling where you see the trade works out, but stop you at break even. You could have grabbed some pips, but you did not get anything at the end. So that's what happened to me. So still figuring out, and why I always basically like to do this kind of real life trade to figuring out, it's because I feel that the analysis or the strategy can be practiced somehow with back tasting, forward tasting, whatever you call it. But the management is really the psychological part, and I think if you want to learn the psychological part of management, you have to use the real money. You don't have to use the real big money, but you do have to know how you will really react if it's real money that you actually feel the pain and joy, basically. I think that's why you will figure out, because a lot of people, I certainly one of them, when we first doing this kind of strategy design, you always say, oh, I'm gonna go for 1 to 4, or like 1 to 10, 1 to 5. But the truth is, when you really trade in live, then you will know how you react to it. Some people, when they're doing back testing, they're perfectly fine to hold a trade. They say, hey, I'm good with 1 to 5, 1 to 2. But in reality, they couldn't tolerate, looking the profit getting away. So in reality, they maybe become person like 1 to 0.8, 1 to 0.9. And that's certainly fine. It's totally fine to understand who you are, how you function psychologically, because I think that's very, very a key point for management in your trading. So I certainly know that I thought I'm fine with, not moving anything, let it run, and I realized that's not the case. especially for swing trade. For intraday trade, I don't really have that much management issue because it's really I'm usually monitoring my trade. I usually wrap it up before the week ends. I don't like to carry anything over the weekend. But for a swing trade, it's different game basically. So for me, it's still figuring out how to manage in the best way. So I did get stop out at break even, and I actually had one more trade getting one more position at 113 and in an intraday perspective. Now I still like this level, and for me, I still have this 200-day moving average, 100-day moving average right now all support well. Of course, this is all technical. Fundamentally, I'm still bullish in the US dollar. Yes, we do have a dovish fade last week, but that does not change the fact that 2 or 3 rate hike is most likely happening in this 2017. Now comparing with Japan this yen, US dollar is still taking a lead. Now, of course, safe haven inflow, you have to watch out, especially the French election, things like that, might all giving Japanese yen a lot of buying power, buying bullish sentiment. So be careful for that. But I do still think US dollar is getting to a point that fundamentally it is really only looking to the upside. Now, of course, that doesn't mean just buying blindly. Watch out a good level. For me, this is a good level just because I do think 100 moving average has been supported quite well. 200 moving average hasn't been touched yet. Even it's been touched, it's still a strong line. So basically, if you zoom out, I just feel like we are in an uptrend basically after Donald Trump gets elected last year. So it's still a retrace cycle if you're looking at this in a Fibonacci point of view, or just in a point of view, like if you have this run uptrend. Now you are really at 50%, and you are still at 50%. So it's not like you retrace all the way to a very low area that might be a reversal. But no, you're still at 50%. So still a good area to get into it. Now, if you're trading my style, you know that entry is never going to be too precise because it's more like we're trying to catch a general direction at a nice level. So you have to be able to tolerate some 100 or 200 pips of drawdown, and of course you are aiming for exactly same amount, and that's just my way of management. You don't have to do this way, but in the general micro direction, I do think dollar yen still looking to the upside. Another trade I have is dollar Swiss, also almost got stop out. I should get stop out already, but I didn't. But no surprise. We're touching this 200-day moving average. This is again bad management from entry, I think, when I entered, but I was never able to hit one-on-one basically. So not really something I can do about it. It's just so much noises, and dollar Swiss was never as strong as dollar yen, so that's what happened here. So this one I really just treat it as a losing trade already. And will I re-enter it? Only if we have a very strong candlestick signal right now at this level, because 200-day is a nice level to hold. But something to watch out is that it's not, unlike this one where you have candlestick close above all 4 moving average to signal a very strong upside movement. This is not the case, because even if you have a nice signal, the upside, you actually have a lot of resistance. You have 100-day moving average, 200-day, 50 moving day average, all become your resistance. So if you compare this to dollar yen, it's almost a similar story, but it can easily break above this 2 moving average. Then the upside is sky is the limit basically. So that's really the difference for me to looking at this technically speaking. Another thing I have, of course, is euro dollar, and we are really in a drawdown right now. Now that was not the case. Now we have a very strong euro sentiment right now, and this was from the French debate. So they have the first French presidential debate, I think, yesterday, and Macron won the debate. Of course, that's a very good sign for Eurozone, basically. because he's pro-euro. Le Pen and what's the other candidate's name? Fillon, I think they lost. So good positive sentiment for euro. On top of that, you have a positive sentiment from ECB, saying that they are going to look into raise the interest rate. I think that was last week or a week before that. And so a quite nice sentiment to keep pushing euro up. And because of that, I actually took some euro trade. Now, euro dollar, I got in really way before here, right? That was my pending order at 1.07. That was really before the FOMC and before everything. And stop loss is 109, so 200 pips away, not a big deal. But a good thing is 200-day moving average should support. This should 0.850 should be a strong support because it has been a pretty good support since last year. But we'll see what happened. Right now, we certainly are in big drawdown. Right now, going to touch 0.8. We'll see how 1.08 holds. So we'll see what happened basically. If you're looking at the previous candlestick, it wasn't that bullish, right? It was sort of like a bearish kangaroo tail. But again, it's very political driven. So we'll see what happened. I'm still, of course, fundamentally think dollar is stronger than euro, but that doesn't mean this trade will not keep going up. Another trade I have is, just give me 1 second. Oh, cable is my another dollar trade. Again, this was a bummer too because 25 was our entry, 27, 25 our stop loss. We move all the way here and now pretty much going to get stop out at break even. Of course, at break even it's better than losing, but you know, we could have one-on-one, we could have at least few pips. I did not move my stop loss due to my my bad. Now, if it's back tasting or things like that, maybe one of the trade you wouldn't even feel it. You're doing years of back tasting, but that's what I'm trying to say. When you're doing the real trading, this is where the psychology kicks in, because this is where you start getting that pain of like, oh man, I could have. Then that's the moment you need to know how you really feel in terms of your management. Now, for me, I certainly don't like losing. Although it's unrealized profit, but I don't like to lose my unrealized profit. So that's why I need to have a new major of management, basically. So worst case scenario, we get stop at break even. I will actually look into re-enter again, but right now things are a little bit different for cable because dollar has a dovish sentiment, where Bank of England actually have a hawkish sentiment. We'll see what happens on the CPI later on, or all the inflation data. If anything, pound yen will not be bad to short. Consider when they trigger Article 50, it's going to be quite volatile for British pound. A more panic move, then that will cause a lot of safe haven inflow into Japanese yen. So in terms of this kind of relationship, pound yen will actually not be a bad trade to target at next week when they trigger Article 50, or when we have further UK news in terms of that. Another trade I am in, my Aussie trade. So my Aussie trade is still in Aussie yen, still rounding, getting at 86, 84 is my stop loss, really targeting, trying to move. This I will learn my lesson. If I'm hitting 88, I will start moving my stop loss upside. Aussie 3, same thing. I'm looking to hit 77.50 at least, but it does look like we are still in this kind of range area. Now, Aussie, we do have the RBA minute, again, just previous Asian session. I still think Aussie is a pretty strong currency in terms of the central bank, in terms of the fundamental data, and in terms of the commodity price and the sentiment of speaking. So that's the trade I had. And I initial few trades last Friday, I think. So I took euro. Now I took euro at 121.50. So that was at this candlestick. So first of all, the fundamental reason. Fundamental reason is because the ECB had been very hawkish recently. And the Dutch election had finished with a good sentiment for euro. So between now and then, the next big event will be a French election, which I think is still a couple weeks to come. But I think Euro will enjoy a recent sentiment, especially the ECB had pretty much changed from dovish to hawkish, or neutral to hawkish. For me, that's a strong momentum accompanied by a high movement, technically speaking. So I do think we are at the right level to take a trade. My stop loss is way below all this moving average to have a strong support. So after that, I actually had a drawdown like this, but it was, as I mentioned, my entry was never going to be precise. That's just the way it is if you trade fundamentally. And today, a good French debate had helped us, so we will see what happened. If the sentiment continue, we should expect to see this thing keep going up. Another thing I took is Euro Newsy. I took at 1.53. Again, we have a differences in central bank, a quite hawkish ECB, a quite dovish RBNZ. And I pretty much trade into the central bank, which I kept saying I shouldn't, but sometimes I'm just tempting to do that. I just think the RBNZ this week should be more dovish. I don't think they're gonna cut interest rate at all or raise interest rate, but I think their statement is going to be more dovish, because last time when they have a good data, they were dovish. So this time they have a bad data. I think they should either be more dovish or just maintain their dovish stance. So that's why that's the differences. And of course, technically speaking, we have a strong uptrend. It does look like we are taking sort of like a flat pattern, a sort of signal here. We might break out above all the moving average are my support all the way down at 49. Now people might say, oh, that's 400 pips away. Yeah, but if you look at the average true range, it's almost over 115 pips. It's really nothing to run for 300-400 pips in the swing trade perspective. Of course, it takes patience, but that's just the way I trade. That's the way how I trade the swing trade style. So we'll see what happened in today's close. Another trade I took is, and of course, again, it technically I took because of this bullish candle. So basically, I sold this one. We crossed 200-day moving average, tasted, and then closing above it with all the fundamental reason. So I put at 1.53 at wrong number and got feel, and right now we're here, sort of break even. Euro Newsy, Newsy dollar. It's another one I took. Same thing I took at this kangaroo tail, touching this 25, not quite 25 moving average, but the thing is just you have so much moving average to act as your resistance. You have a very strong downtrend. Fundamentally speaking, Federal Reserve is much hawkish. Although they were soft off last week, but they were much hawkish for their 2017 plan versus RBNZ. So that's why I put a short at 0.7, wrong number. And right now we are at drawdown, but again, that's just the expectation. Stop loss way below 0.150. We'll see what happened, and I do expect to retouch 0.69. So that's pretty much it. My current trade, I don't really have anything else. Again, I'm only for swing trade only looking to buy right now. Only looking to buy 3 currency, maybe 4 actually. I was looking to buy dollar and Aussie for sure, but right now because of the and now euro, it's become, because of ECB, it's something worthwhile to buy for me. But of course, I'm not going to buy against dollar or Aussie. Another one is British pound due to the Bank of England, but I understand, as I was saying, the catch last week was that the member that descent from BOE, he is going to leave in June, so he's no longer going to be a Bank of England member. That's the first thing. Second thing is that the most critical event next month for UK is not the interest rate, it's not British pound, it's the negotiation with EU. That will be the main driver, and right now things are really up in the air. a lot of uncertainty. That's not good for a country. So the currency, if you have to pick a side, it's really more looking to the downside. So that's why, although Bank of England might raise the interest rate, which providing will be positive for British pound, I still reluctant to buy British pound in a swing trade perspective. I might do it in an intraday, but not a swing trade, because I don't have a long-term confidence in the currency of UK right now. So that's pretty much what happened. So yeah, that's it, guys. I'm going to 5 minutes away. I'm going to trade the CPI right now, and be back next session or two, just to see what's gonna happen after today's closing. Okay. No, it's a very short update. Again, I hope you find this video helpful, and if you have any question, feel free to ask me. Okay, I will talk to you guys very soon. Thanks for watching. Bye bye.